Welcome everyone to the World Bank headquarters and to the 2020 annual meetings. I'm Srimati Sridhar, live in our Washington, D.C. atrium, and all this week my colleagues and I will be guiding you through 5 days of events, discussions, and activities as these historic meetings go truly virtual and truly global. Now we're just minutes away from the kickoff event, Defusing Debt. But before that, let's talk about how you at home can participate. And to do that, let me welcome my colleague, Papsi Mariano. Papsi, thanks for joining us.
Hi, Shri. It's a pleasure. It's good to see you after so many months.
I know, it's so strange. It's great to see you. So, tell me, I know folks will be joining us through Facebook, Twitter, LinkedIn, but you were saying earlier that World Bank Live is the best place viewers can tune in to watch the meetings this year. Why is that?
Yes, so on top of watching the live stream of the events on World Bank Live, there's a poll going on that we want people to participate in, as well as the live chat. So the live chat would give people the opportunity to ask their questions to our experts. So please take advantage of that.
So speaking of these questions, I understand that some of those questions that viewers ask will have a chance to come here to the live set later on in the show. Can you tell us a bit more about what's going to happen there?
Sure. So right after the event, please stay tuned because we will have what I call a post-analysis of the event, where we will have some of the experts and our speakers in the panel here on our set. So any questions that you have may put on the live chat will come here to the experts so they could answer them.
So definitely, I think, a big incentive for folks to put in their questions.
Yeah, absolutely.
Now, one of the things I've noticed is there's some sort of digital art project that's going on, right? It looks so cool. Tell me more about that.
Yeah, so one of the creative things that we're doing here in the annual meetings is this digital mosaic. So the theme of the meetings is around supporting a resilient recovery. So we wanted to know what people thought about resilience, what resilience means to them. And interestingly enough, people have participated by sending us their pictures through this digital mosaic. So we will reveal an image at the end of the week. Please watch out for that. So there's still time to add your photo if you want and participate. Just go to live.worldbank.org/mosaic.
Perfect. And I believe the hashtag to use would be resilient recovery.
Yes,
correct?
So you can also use the hashtag resilient recovery on your Twitter and Instagram, and our system will pull your picture into the mosaic.
That sounds awesome. I know I put in my picture, but it's going to be great. I can't wait to see the huge reveal.
Yeah, please go ahead. If you need a boost of inspiration, go check the mosaic out, and you'll
Thank you so much, Papsi. Well, folks, we are just minutes away from the kickoff of the 2020 annual meetings, and today we're discussing debt, specifically the fact that many developing countries are now facing an unsustainable debt situation, made all the worse by COVID-19. Now, we've got a fantastic program coming up for you featuring all-star guests. Papsi and I will be back in about an hour and 15 minutes time, so please stay tuned. But for now, let me hand it over to my colleague, Paul Blake. Paul, over to you.
Hello, everybody. Welcome to the World Bank Group. Welcome to Washington, D.C., and welcome to the annual meetings in 2020. I'm Paul Blake, coming to you from a rather empty World Bank Group headquarters. But no matter, though, today kicks off 5 days of exciting programming that you, more than ever, have the chance to be part of. And we start today with the critical issue of debt. More and more countries are falling into precarious debt situations that are made all the worse by the ongoing global pandemic. So what can be done? That's just one of the questions that we'll be examining here over the next hour. Well, as we convene remotely, we're reminded that COVID-19 has triggered the most significant global economic crisis since World War II. And even before the coronavirus emerged, many countries were falling into debt distress. Throughout this hour, we want you to send us your questions and your comments, comment on social media, or post a question on World Bank Live. We're also asking you to respond to our poll, and we're asking, what is needed most to break the cycle of debt distress and help poor countries cope? Is it suspending debt payments, reducing debt stock, balancing creditors' rights with the interests of the poor, or increasing debt transparency and accountability? Give us your take by voting at World Bank Live, and send us your questions and your comments. We'll be joined by one of our experts at the end of this show, where we'll be getting some of those questions answered and getting some of your comments on air. You can also join the conversation online by using #ResilientRecovery and #DebtForDev. Now, before we join our expert panel, let's take a quick look back at some of the cycles of debt that have impacted economic development for decades.
Jakarta, and you are watching the World Bank Group IMF annual meetings.
Well, as the debt to GDP ratio in developing countries has jumped 10% just in the last 6 months, and many countries are falling into debt distress, it's time we looked at this issue with a critical eye and came together to look for solutions. And to do just that, I'm very happy to welcome Odile Renaud-Basso. She's the chairperson of the Paris Club. Adriano Maleiane, he is the Minister of Economy and Finance in Mozambique, as well as Carmen Reinhart, the World Bank's chief economist. And leading this discussion will be David Malpass, the president of the World Bank Group. David, take it away.
This is a very important way to kick off the annual meetings. We're at a critical time in the debt cycle, with debt distress more and more important for a number of countries. We expect there'll be more restructurings, and we have a very good panel to talk about the debt process itself. The World Bank yesterday released our new report on international debt statistics, which is the update for the 2019 debt data that has benefited substantially from the transparency process that we've been pushing forward with during the middle of this year. So let me start with where it matters most. With Mozambique, we have Minister Maleiane, who, and I wanted to welcome him and also ask him to tell us what he thinks about, how he thinks about debt, about Mozambique's debt, but debt in general. How is it helpful? What are the burdens? What are some of the biggest issues you're facing right now with Mozambique's debt? Thank you, Minister.
Thank you very much, Mr. President, and I'm glad to see you again.
Thank you. Obrigado.
Of course, this topic is very important for us. But before I elaborate on this, I think that for me, there are 4 or 3 issues that we have to deal with. First, in case of Mozambique, the infrastructure is the basic, because we are we use infrastructure, for example, roads, bridges, and to serve our own country, but at the same time, we have to serve our neighbors. So this is one incentive, one of the first incentives that we have to borrow money. The second, unfortunately we're running current account deficit. But I will elaborate later on that. And the third thing is related with the currency depreciation, which impact on our debt. But we are doing our best. We are doing everything possible to create confidence from our creditors. Mozambique started to set up mechanism to make sure that when we go abroad to borrow money, we are sure that that money is being used for the purpose that is relevant for our economy. So we decided to look at the legal aspect, and we strengthened our capacity in terms of legal aspects. And also, we thought that we should have some kind of risk assessment in Mozambique, and we set up that department. So that makes sure that everything that we are doing is very important. And also, I used to say that if you are not well organized, please don't go for capital markets, because investors, they want information. They want accurate information, and if you have no capacity to do that, you prevent to go there. So that was the first comment that I would like to say to understand how we are organizing our the debt management. But of course, I think that we had a very difficult moment at first, but now things we have succeeded to restructure our debt, and now we are in position to go on and financing the investments that we still need. But of course, that should be very, very, very constitutional terms, like World Bank that is being supported. And so this is why we welcome the idea of IDA 19, because
Mozambique is doing initiative.
Yes. So may I stop here because I understand that we will continue to have some. We'll continue to have these issue in other moments.
And I think Odile, I want to welcome Odile and merci beaucoup. And you were asking the minister about the moratorium itself. So I wonder, Minister, have you been able to suspend some of your debt payments?
We've been working with our bilateral creditors. We sent a letter for them. And also we sent the memorandum of agreement with the Paris Club. We're just waiting for the decision. Of course, so far we didn't receive formal reaction coming from creditors. We presume that they are doing their best, and we hope that the Secretariat from Paris Club maybe will invite us for negotiations. But we welcome the idea, and I see that the World Bank is also supporting, because I think that maybe it's time to see this initiative as one of important support that the country like Mozambique will come, because we need money to help those in need, especially affected by COVID-19. So we hope and we would thank all initiatives coming from the bilateral creditors.
Thank you. And a purpose is to free fiscal space. So by deferring the payments to the official bilateral, it defers space. And we have the right person. Odile is chair of the Paris Club itself. So I wanted to ask her. We can ask specifically about Mozambique, but also about the bigger question of how can we go about broadening and extending the initiative. That means the deferral of the payments, and what are some of the key steps? And if you get through that, I do want to ask you also about some of the restructurings that are underway now. Yeah. So thanks for joining us, Odile.
Merci beaucoup, David. Very nice to see you, and thank you for the World Bank for the invitation. So indeed, the initiative, the DSSI, which has been launched in April in the spring meetings, has been implemented very fastly. And for Mozambique, I think the process is about to be finalized. And I think the big value added of this initiative is first to provide some debt relief short term, because it's just a suspension of the maturity, the payments falling due in until the end of the year, until December 2020. But it has been, the value added is that it provides alleviation of debt service very quickly. And the new element is, I think we managed to go beyond just the Paris Club creditors who are used to work together and so forth, but to work with the G20 and to work with new creditors in the G20, in particular China, which is participating to this initiative. So I think this is a big step forward. Of course, as I was saying, it's a short-term debt relief, and now the question is what's next. And we've been working as creditors very closely with the World Bank and the IMF to assess what are the needs for the next steps. And in particular, I think that there will be different situations and countries facing different situations. Some countries may be able to start again debt service after in the context of the post-COVID crisis rebound and so forth. But some countries may, because of the economic shock, and maybe also because they have entered the shock with already high debt burden and debt which was not completely necessarily sustainable, they will need to have a deeper debt relief with probably debt reduction and stock treatment. And I think that this should be done as rapidly as possible when we have on the basis of the debt sustainability provided by the IFIs, the World Bank and IMF. And in this debt treatment, we should also aim at having not only the Paris Club creditors, but also the G20 key creditors, so all the official creditors involving China, India, and big G20 members, and the private sector creditors. Because as you may know, in the DSSI, so for the moratorium, the private sector creditors with the IIF, they made statements explaining they were willing to participate, but at the end of the day, as it was agreed that it would be a voluntary approach, at the end of the day, in practical terms, there is very limited participation. And we believe that if we go for more in-depth and more ambitious debt restructuring, dealing really with the debt sustainability of the countries, we would need to involve the private sector creditors. This is, of course, more complex, but I think the Paris Club is used to work with the comparability of treatment clause, which provides a sound basis to involve the creditors. One of the difficulty, of course, which is quite new, is the importance taken by market debt compared with previously we had more some loans which were easy to restructure. With market debt, you need to use the CACs, and all the debt is not covered by the CAC. So these create new challenges, but we will need to address them in order to ensure fair burden sharing.
Thank you for the broad update, and that comparability of treatment, and Paris Club used to working with private sector creditors on that is an important and key part of this. World Bank works closely with the IMF, with the Paris Club, and with the G20, with everyone having the goal of freeing up fiscal space, both in the short term, as is being done now through the moratorium, but then also the sustainability of the debt situation and the new investment. As the Mozambique minister pointed out, the ultimate goal is to get new investment and have it be financed, which is something that we're working on hard. So before I turn to Carmen, I wanted to ask Odile, with regard to the participation, I saw recently a Financial Times article on policy, on the policy banks in China having a very, very low yield in terms of their ability to borrow. And so they're being treated in the markets as both policy banks, development institutions, but almost as if they are official creditors. So I wonder if you're satisfied, or how can we encourage fuller participation by the policy banks in China in these debt deferrals, and also in the consideration of debt reduction as we go forward?
I mean, this has been indeed a discussion with the Chinese authorities, because, of course, Paris Club creditors are used to work together and have the same kind of definition of what is official debt, what is private debt, and so forth. China, as a newcomer, had to assess its exposure and the exposures of the different banks. And indeed, we had some discussion on, for example, China Development Bank being considered by the Chinese authority not as a public debt, so as an official creditor, but as a private one. And I mean, this can be questioned. It's not so easy to assess, and this really can be questioned. But I think that at the end of the day, and that's why also comparity of treatment with the private sector would be so important, if the same effort is requested from official creditors and private creditors, then I mean, this issue of the classification of the debt becomes less important. But what is problematic now is that the private sector creditors has not done much under the SSI. So, and if you are official creditors, you have also some kind of protection, because you are much more, the IMF cannot extend a loan if you have official arrears, and they treat differently non-official arrears. So I think that this is an assessment, and I mean, we need to continue the discussion with the Chinese authorities, but I think that has been part of the discussion. But at the end of the day, what is important is a level playing field.
Yes, so we have the example in Ecuador of the policy banks, the non-Paris Club policy banks, not participating in the commercial creditor restructuring, and then in Angola not participating fully in the official bilateral restructuring, and so it ends up with a much shallower amount of debt relief for the poorest countries than, or for the developing world, than what might be achieved. So let me turn to Carmen. Any observations or thoughts on this challenge? Carmen is the chief economist of the World Bank and has immense observations about all of these topics. One of the world's most prolific and respected authors on the topic of debt.
Thank you, David, for the kind introduction. And well, I mean, there's a lot of observations that I could make, but I think one that is particularly pertinent right now is that we seem to be at a conjuncture in which the DSSI initiative, as necessary, welcome, and timely as it was always intended to be providing shorter term relief, but about half of the IDA low-income countries are either in debt distress or very close to it, which raises the issue of what happens beyond the SSI. And there, I want to go back to both what the minister raised and also very importantly, Odile's remarks and participation. For the recovering out of this deep crisis, we're going to need the infrastructure investment. We're going to need investment in to restore human capital. That's been really the ability to rebuild post-COVID is critical. That requires funding. At the same time, the debt overhang, that's a legacy of COVID, needs to be addressed via restructuring. And here I want to go back to Odile's point that participation is hugely important. If you look at the historical experience of debt restructurings, what has caused them to fail repeatedly? And one is limited participation, in which the amount of debt restructured isn't comprehensive enough to really provide substantive debt relief. That's one type of problem. So that requires participation of all the creditors, official and private. The second is what kind of relief? Unfortunately, historically also, the tendency in the early stages of recognizing a debt overhang is to go the route of maturity extensions and perhaps some temporary, some temporary grace period for repayment. But that usually actually doesn't always and quite often does not deal with head-on with the problem that debt levels relative to incomes are just too high, and that haircuts in terms of reduction of principal is necessary. I hope, and I see that, David, going forward as the area that we're heading into. But unfortunately, historically, it always takes us a long time for the creditor community to accept that.
I want to ask Odile and then turn back to Minister Maleiane. Odile, in the recent Ecuador rescheduling, there was not a Paris Club rescheduling. So a challenge is that many of the creditors that were not exactly commercial creditors were left out of the restructuring, and so it becomes an ad hoc process for further debt reduction for Ecuador. Do you have observation? Could there have been a Paris Club rescheduling for that process for Ecuador?
I think, but I would have to check that the Paris Club exposure was very limited. So because,
low.
I mean, what happened in the last year is that Paris Club creditors, indeed, in the early years, I've been working with the Paris Club for very long. And indeed, in the 80s, 90s, Paris Club approach was really to have sort of maturities, treatment, and increase slowly the level of cancellation. I think a big step has been done with the initiative for the EPIC, and then Paris Club creditors cancelled a lot of their debt. And now in a number of countries, the Paris Club debt is relatively limited. But
Odile, sorry to interrupt, but isn't it important to set a benchmark for the non-Paris Club official creditors?
No, I do agree, and I think that will be the approach post-DSSI that will be taken, which is to use the Paris Club as the core creditors, enlarging to the G20 and then the private sector. And I think that what Carmen said, that we need to avoid to be not enough ambitious in terms of debt treatment, and I think that the idea is more to deal with the stock of the debt and to provide a treatment that delivers debt sustainability. But then I think there are two accompanying issues that are very important. The first one is that I think that whatever is done in terms of debt relief will probably not be enough, and we need to find appropriate ways to finance the countries and the investment needed as reflected by the minister. And the second point is that we need to be sure that debt overhang does not being rebuilt, and we avoid to fall in the same trap than the one we have been facing following EPIC initiative, and start again rebuilding debt overhang.
Exactly right. So the World Bank is committed to and trying to provide large net positive flows as part of that resource, and also make them concessional. Many of them are grants, which then helps the countries dig out of a debt hole if that has occurred. The debt distress problem is a major one, and Carmen has written about the long time it has often taken in previous credit cycles or debt distress cycles, that it can take as long as 7 years for countries to get to the spot where they're in a debt reduction process that that's actually helpful. So one of the key things that we're trying to do in this debt distress cycle, which we think could turn out to be one of the most stressful for the poorest countries. We want to get to the point of debt reduction sooner so that countries can have light at the end of the tunnel. I want to ask Minister Maleiane, so Odile is pointing out that there is a Paris Club MOU and rescheduling that's working its way through and is nearly available for Mozambique. Will this give you opportunities to have conversation with the non-Paris Club rescheduling creditors, the non-Paris Club creditors, and particularly China in terms of its large credits? How big a creditor is China for you? And I wonder also whether you're in a position now to ask the private sector creditors for some relief on the debt payments, the large debt payments you're making to private sector creditors. Isn't it time to ask for that? Minister.
Thank you very much, Mr. President. But before I answer, I want to comment on the G20 facilities. For Mozambique, we welcome the idea that will help Mozambique to relieve some cash problem. But the only problem that I see in these initiatives is when the issue is suspension, not cancellation, raise more question than answer. Because when you suspend, you are supposed to pay, let's say, in January or February, because you are suspending something you're not paying until December. But it's not clear what happened. Because today you have your budget more or less equilibrated. But tomorrow, meaning that next year, we don't know if we will be in position to serve that suspended debt service. So this is one issue that we think that maybe should be important to assess what is the best way, cancel or suspend. I think that if the cancellation, as World Bank, as IMF, for example, did, and we use that money to support health and education. That make them more sustainable for the recipient country. But of course, I think that suspending is one step, very good, but still a lot of questions than answer that we still have we don't have answer, because we don't know what will happen in the future. Maybe Madame Odile can help us, saying that maybe the Paris Club is thinking about HIPIC 3, so that will be perhaps the way out from the problem. So yes, with China, we did the same. We sent a letter because we have two type of loan with China. One we call government debt, and the other we borrow from the banking system, which, for example, Exim Bank. So we sent to them also. Total debt with China is 1.3 billion US dollar, which is quite significant for our standard. So we at this stage we just wait to see what will be the response. But I understand that they joined, or they are joining the G20 initiative. They might be they're trying to see how to accommodate our needs.
That's
but,
right. In general, the G20 initiative called for a suspension of both debt, both principal and interest payments. And in general, what China's been offering is a suspension of only the principal payment, or a delay, a deferral in the principal payments. So it's left some of the countries under a heavy current debt payment burden, which is not comparable to what the Paris Club is doing. So that creates some challenge for the Paris Club creditors, because they see non-comparable treatment operating. But I want, if I may ask Minister Maleiane, on the private sector side, is there an opportunity now to ask them also for the suspension of payments? And with your point is good, that you have to, once you've suspended or deferred payments, that begins the time to talk about debt sustainability more generally, and whether debt reduction or cancellation is in the cards. But have you asked private sector creditors for debt relief?
No, well, of course, we didn't send to private creditors by simple reason. We took a long time in discussing for this restructuring process. So we thought that the terms and conditions that we succeed to have is better for the time being. But we thought that in terms of priority, we should settle this initiative, I mean the G20 initiative, before we go to create more instability. Because to be honest, I think that we took 2 years to negotiate with a private sector, and I see that that was good achievement. So we want to have this G20 initiative close with all these doubt clarified, so that we can see how to move to other. But also Mozambique, we needed to have a private sector support, because as I mentioned in the past, we needed a huge money for investment. We are attracting the private sector to invest in Mozambique. They will need to have these private loans. So we should not create doubt in terms of future. Otherwise, I mean, the price of borrowing will be more costly for the sector. And we think that, of course, if they take initiative also, they follow the G20 initiative, and we will welcome. But we didn't took initiative to approach them, especially in the case of Mozambique, because we spent a lot of time to negotiate, and we succeeded to have this issue, and we want to deal and make sure that the creditor confidence for Mozambique will continue to be strong, and they will help us to finance and overcome these debt stress.
Thank you for sharing on that. We're at the end of our panel, but I wanted to thank everyone and also to reaffirm the ultimate goal. We in the short term to create fiscal space for countries that are facing the COVID crisis, and in the longer term, as we're thinking about Mozambique, the idea is more investment, transparent investment, high quality investment that will help the country move forward with the associated debt that can come with it. So we take your point well, and the G20 as a group will be trying to tackle some of these questions and decide whether to urge commercial creditors to begin participating in some kind of debt relief given the severity of the circumstances. But I want to thank all three panelists and very interesting discussion. Thanks much.
Thank you very much.
Thank you very much.
I'm Eric Keglan in Lome, Togo, and you're watching the World Bank Group IMF annual meetings.
Thank you, David, and thanks to all the guests who've joined us so far this morning, and to everyone out there who's tuning in around the world. We really appreciate you taking the time this morning. Now, as a reminder, we're asking for you to vote in our poll, and we're asking the question, what is needed most to break the cycle of debt distress and help poor countries cope? Is it suspending debt payments, reducing debt stock, balancing creditors' rights with the interests of the poor, or increasing debt transparency and accountability? You can have your say over at the World Bank Live website. And in about 30 minutes time, we'll be revealing the results of that poll here from a special live program coming from the atrium. We'll also be joined by David Malpass to answer your questions and your comments. So be sure to send us those either on social media or on the World Bank Live website. Now, as David assembles another expert panel for us, let's take a quick moment to hear from Kevin Watkins, Chief Executive of Save the Children, about why debt matters.
Debt matters because right now, many of the poorest countries in the world are spending more repaying their creditors than they're spending on the health, education, and nutrition of their children. At a time of rising child poverty, with health systems and education systems under enormous financial pressure and reversals in so many areas of child well-being, it's now vital that we convert unpayable debt liabilities into the investments that will give children hope for the future. Not all debt is bad, but when the claims of creditors threaten the rights of children, there is only one choice to be made, and that is the choice to defend child rights.
Save the Children's Kevin Watkins there, reminding us why it's so important to get debt right, especially when it impacts the next generation. Well, it's time to hand back to World Bank Group President David Malpass, who's got an expert panel assembled for us. It includes JP Morgan's Global Chair of Research, Joyce Chang, Georgetown University Professor of Law, Anna Gelpern, Credit Suisse Brazil's Ilan Goldfein, and World Bank Group Chief Economist, Carmen Reinhart. David, over to you.
Hello, everyone. In our first panel, we heard some about Paris Club reschedulings and about the perspective on debt, both public sector and private sector. In this panel, we have esteemed panelists with a tremendous number of years of experience looking at debt issues through various cycles. So what I'm hoping we can do is tap into that experience as we examine the current debt situation. Markets are still open, and so that's an interesting shift from some of the previous cycles. But there is the risk of selective debt access problems, and one of the big challenges of this current crisis is the inequality of it. The poorest countries are being hit the hardest, which is not always the case in past cycles. So I wanted to turn to Joyce Chang, who has seen lots of debt cycles. Joyce, what do you think about this cycle? Where are we in the cycle, and what could be done to make it as beneficial for the countries, the developing countries, as possible.
Thank you so much, David. It's wonderful to be with you and with such a distinguished group of panelists. So higher emerging markets debt is going to be one of the lasting legacies of the COVID-19 crisis. We're expecting an increase in emerging markets debt levels of about 8.5 percentage points of GDP. And that's the largest single year increase on record. And this follows what has been a real massive increase in the universe of emerging markets investable tradable debt over the last 20 years. That universe is now $23 trillion. It was less than $1 trillion in 2000. And we now have 74 countries in our emerging market sovereign bond index compared to just 10 countries in the early 1990s. So there's a couple of things I would say about this crisis. That first of all, the emerging markets are not one monolithic block. There isn't a one-size-fits-all formula for debt management. And I think 2021 will be characterized by divergence between regions. And as you said, the poorest regions being the hardest hit. The divergence and asymmetry are the two themes that we think will persist after seeing such a synchronized downturn and also a synchronized rebound of sorts in 2020. So I want to talk a bit about just the blocks of emerging markets countries and how we look at them and how they will fare. There's China and North Asia, which is coming out of this crisis in a better place. China's the only country where we really see a V-shaped rebound, 2.5% growth this year. And many of these countries are net external creditors. There's the large EM middle income countries like Brazil, Elon will talk more about that, Mexico, South Africa, many of them which were on the cusp of investment grade or investment grade and have lost that rating. And there's a question on whether this could be a lost decade. And then there's the more distressed low income frontier markets countries. Now, to begin with China, China itself has actually surpassed the Paris Club countries and international financial institutions to become the largest new creditor to EM countries, especially some of the low-income economies. And China's overseas lending went from like around 190 billion to 735 billion in 2018. So it's very important that China, as a global creditor to the poorest countries, is included in these discussions. As you've said, the markets have been open, and that's been one thing that has been quite different in this crisis. And what we've actually seen is with such low yields that are now in place, emerging market sovereigns this year have been able to raise about $173 billion. And we think they'll raise another $50 billion before the end of the year. But the vast majority of that has been for investment grade countries, 130 billion of the 173 billion for investment grade emerging markets countries. Now, the corporate debt issuance is actually growing at a record pace as well. 370 billion issued year to date. So I think there's a balance to be struck there. We don't want any initiatives that would imperil the market access to the extent possible, particularly for those countries that serve as the benchmarks for their corporate bond index. But I'd like to point to some opportunities for growth and where we do see this going ahead. First, I think there's room for innovation. We are looking at putting credit enhanced bonds into our emerging markets bond indexes and also launching the first green bond index. So we're sort of coming full circle from the days of the US Treasury collateralized Brady bonds. Could we actually look at ESG and sustainability commitments in return for credit guarantees and also make this a broader discussion about emerging markets and ESG? And there's a green bond index. The other thing I would say is that there is interest in the emerging markets asset class now because of where yields are at. And if you take a look at developed market government bond debts, 33 trillion of them have a yield of 50 basis points or less. 15 trillion of it has a negative yield. So at a 4.5% yield, we are seeing more inquiry about investing in emerging markets local currency. There are concerns about the FX risk. There's the need for continued transparency and responsible macro policies. But there's also China's entry as the second largest bond market in the world into the mainstream indexes, which is propelling interest and inquiry on the emerging markets asset class. So whereas we do see the challenges from the debt burden and the fiscal burden that has been put on countries by the crisis, we also do see opportunities for growth. We see that the markets have remained open for the investment grade sector. And we do see that there will be a broader discussion in this low yield environment about where to put emerging emerging markets in a portfolio.
Oh, that was a great scene setter. And I'm going to, in a minute, come to Anna and ask about the balance between creditors and debtors. You know, one thing that makes an asset class attractive is if there's the perception or the legal reality of an ability to collect from that asset class. So I'm very interested in the balance between creditors and debtors in the current legal environment. But let me first go to Ilan, who was governor of the Central Bank of Brazil and now working the private sector side. Ilan, what's your how big a debt cycle do you think we're in? Can we motor through it as the recovery takes hold in advanced economies?
Well, thank you very much for the invitation. It's a pleasure to be here. I would like to start just making a few comments on the pandemic, where we are, then talk a little bit about the debt cycle and what are the lessons, and then finally talk a little bit about the case of countries like Brazil and what are the lessons for that. So I think the problem we have in this cycle is not the reaction to the pandemic, but rather the consequences of that. I think the reaction in supporting the economy, supporting the poor, smoothing the impact of a major shock to the economies was mainly correct. In the case of Brazil, for example, you had the emergency help, and that supported the poor, and that was quite important for the last few months. But now you inherited the larger debt, as Joyce mentioned. There's an average increase, and I think the World Bank calculated 10% on average. In the case of Brazil, it's going to be even 20% increase in debt. But that's the issue, and how do we deal with it right now? I would like to congratulate the World Bank for their efforts during the pandemic, providing relief. Positive flows came from the official sector, especially for poorer countries. I'm not talking here about the medium income. So I think that has been important also for the private sector through the IFC. My assessment is that in this debt cycle, we are not talking about any moral hazard argument. It is very clear that the pandemic is a natural disaster. It's harder to make the case of are you going to generate more hazard if you give some forgiveness, if you deal with the debt. So the question is, what do you do now? I think we should start talking about at the beginning to support the recovery. These countries have to grow back. We need to have measures to deal with the vaccinations, with the COVID. We should try to avoid the second round because the recovery will be essential to have better fiscal conditions and to deal with the debt burden that most of them have. Second, as you mentioned, there is the markets are still open. And the reason they are still open is that the global environment is very different this time around. We have very low interest rates all around the world. We have ample liquidity, and that is basically giving a different feeling this time around. So countries do have time, can buy time. But the question we have to ask ourselves is, what are we buying time for? Are we really buying time or losing time when we access markets?
And Ilan, I'll interject the point too that the political cycle is different from the investment cycle. So there's a temptation when money is readily available in markets for those countries to borrow a lot now because the consequences won't be felt for years and years.
Exactly. So there is a trade-off here where you do feel that there is a need for continue to support economies, the risk of fiscal cliffs. So you're very tempted to use this market cycle, as you mentioned, but at the same time, we do know that there is a debt, the debt is higher, and you have to deal with it. In the case of Brazil, The debt is going from 75% of GDP to 95% of GDP. It is mostly public debt to domestic private citizens. So here the issue is about redistribution. What do you have to make the choices? Who's going to pay for the COVID that was spent during this year? Who do you tax? Who do you reduce spending? Are you going to make the choice for the poorer part of the population? If you're going to do that, you do need to find financing for that. And finally, and just that's to end, I think there are some lessons that come from the case. First, it is quite important for the debt instruments to be relatively flexible. So again, we are back to issues like hard currency debt is not, it should be avoided if possible. Short-term debt should be avoided, we all know that. But maybe we also need to think about resolutions that could be more automatic. There was the CACs, but at the time where markets are open and you're not thinking about the future, CACs and collective action clauses seem to be unnecessary. They seem to be expensive. But once they happen, you do need them. So maybe it's now the moment to make the case that we need more instruments that allow us to automatic resolution. There is market resolution, which is the currency fluctuates. If it's in domestic currencies, there is a loss there. If you have equity or long-term debt, it also loses value. But we do need to have the automatic provisions also in the contract.
Yeah, that's a great transition to Anna. There's multiple things going on. One is the political cycle invites a lot of borrowing. And then from the standpoint of the covenants then the terms become what's the maturity of the debt that can be obtained, but also the covenants within the debt clauses that normally we would want those to go to lighter and lighter covenants that were flexible in terms of a restructuring, but there's not all that much incentive. Ilan was saying a collective action clause is expensive, so there's always going to be a temptation on the borrower's side to accept heavier covenants. So I wonder, Anna, what can be done to try to make restructurings easier so that those countries that make investments that don't work out have some way out? There's not a bankruptcy process for sovereign debt, and there's also not very much transparency in that debt. So it leaves some countries in a very difficult situation for a long time. What do you think? What should be done?
David, thank you so much. And it's an honor and a pleasure to join this group. And thank you also for the focus that you have maintained on this question for some time, even before the pandemic. Of course, you asked a really big and very important question. We could just make a syllabus out of that. And where I want to start is something that's really been just drawing my mind for some time. If you look at the US Treasury terms, if you look at the Uniform Offering Circular, you would never guess where their repayment term is. It's under miscellaneous, it's 2 lines long, and it doesn't say much of anything, right? Whereas if you look at the contracts that are signed by most of the countries that we're discussing, they are very term heavy, quite complicated, and very variegated, especially between domestic and external. And it's worth thinking about what it means to have a contract that is not strictly enforceable because the borrower is immune on the one hand, but on the other hand, that never goes away because, as you said, there is no bankruptcy. Right? So as a result, both debtors and creditors are drawn into what could be an interminable back and forth and a negotiation and chasing assets around the globe, that there is no process to short circuit that, to stop, right? Moreover, immunity doesn't provide complete protection, of course, as we all know. And there are a couple of ways that I think are related to something that you just raised that it makes sense to flag. One is, of course, you could get enforcement by controlling assets, right? And in the 19th century, when there was absolute immunity, creditors, tried to control Peruvian guano, right? And today we're seeing some of that come back in the form of more collateralized debt. And I think even more problematically, debt that is not formally collateralized, but that gives some creditors effective control over assets, so that when there is a crisis and when we're trying to muster resources from taxpayers all over the world, from the World Bank, from the IMF, there is a set of assets that may be super valuable and that may actually account for the bulk of the country's basically cash that are out of reach. And I think this is where your transparency point is supremely important. I think we have woefully little information about sovereign debt and sovereign debt terms in particular. I do think it's a problem that may be more acute now given the diversity of creditors, but it's not a new problem, right? I think we have to recognize this as something that's been a feature of the system for some time. And another problem that I want to bring back to this immunity protections, but incomplete immunity, is that in the sovereign space, uniquely perhaps, it is very hard to disentangle debtor-creditor issues from intercreditor issues. Because of course, if you can't have direct enforcement, what you're going to try to do is divert flows that might be going to other creditors, other claimants, and get priority that way and force your claim by effectively expropriating other creditors, since you can't reach the debtor directly, right? And so this is where a lot of the contract clauses that are often perceived as giving debtor or creditor leverage, like collective action clauses, they're really an intercreditor device, right? And intercredit, so they're sort of a bondholder governance mechanism that works sometimes, but is certainly not a panacea. I think that one of the things we've learned from recent restructurings or ongoing restructurings in Argentina and Ecuador that really just completed is that even with clauses that have been poured over for years and years and that have been very salient, we don't quite know how they will be used, right? So in this environment that I think we've heard about, fragmentation, we've heard about divergence, and certainly, we've also heard about just this pervasive uncertainty. I think that what we need to do is pull back, and rather than focus on the commas of any given clause, think back to full principles. For example, comparability, intercreditor equity, right? There has to be a mechanism that encompasses all creditors, right, to ensure that everyone contributes equitably to a sustainable solution. Voluntary restructuring is the ideal, but it does come in tension with both that sort of majority rule idea that is embedded in clauses like CATS, and broader ideas about comparability and equity. And I think we really need to come together as a community around these first principles to agree on the way forward.
Yeah, I think that's a great spot. That's a syllabus for a course. And also what we're trying to do at the World Bank is push forward as fast as we can, recognizing the urgency of the crisis, that it would be easy to get lulled into because markets are open. The idea that market access will help everyone, it probably will help some of the debtors, but others will be in such distress that they lose out on the market access. What we're trying to do with the bank is have transparency, for example, of individual contracts. In Ecuador, in their recent restructuring, there were more contracts disclosed, and that helps people, but still not at all complete disclosure. And Angola is working on a debt restructuring, but the transparency is not very extensive, and so that means there are still major contracts where the terms are not known, and that makes it hard for other creditors to know whether they're getting a fair treatment or comparable treatment within the mix. So I really want us to push forward with transparency, also maybe with the idea that when there's new money that's put into situations, given we're in post-COVID, when new money is put in, it should be on terms that allow or anticipate or make easier the possibility of a future restructuring. Call it covenant light. I want to turn to Carmen, and then I'm going to go back to Joyce, and we'll probably run out of time. But Carmen's chief economist of World Bank. She wrote the book on debt, but also she is head of the part of the bank that collects and publishes the international debt statistics, which the new edition just came out yesterday. So, Carmen, what are your thoughts on the creditor-debtor imbalance?
First, David, I have to. I've been sorely tempted by Joyce and Ilan. The whole concept of market access. I think fickle is a term that often has been used in conjunction with market access, and let me because you both really present a very benign scenario for emerging markets, which doesn't quite fit with some of the things we're seeing. Record sovereign downgrades this year. If you look at the major credit ratings, these are record sovereign downgrades, record corporate downgrades. I believe for Latin America, Ilan, according to Fitch, about 60% of the corporates that they rate were downgraded this year. Some countries indeed have been able to borrow, but I think El Salvador may have set the record with a bond that has a coupon of 9.5, which you have to wonder how a country repays 9.5. So I and let me just conclude on that note before I go to the debtor creditor issue. The response, so aggressive, with liquidity facilities by the Fed, I think, stabilized markets big time. But from the data that I see, capital flows to emerging markets have really been trickling down in August and September. This is the sort of big push factors, the classic international push factors with the lowering of rates and the liquidity injections are perhaps winding down. So I'd love to pick your brain on that. But
Carmen, go ahead and take over. So let's hear Joyce respond and then come back to Carmen.
And I would like to respond to.
Okay, Ilan. Go ahead, Ilan.
I agree with you, Carmen. The situation for in emerging market is very, very complicated fiscally. Debt has been going up by 10% at least. I mentioned in the case of Brazil, 20%. It's a major issue what to do with that. It's not going to be easy to deal with the consequences of the pandemic. But that's different from saying that there is no market access. For some countries, there is indeed market access, which I'm not sure is so good, to be honest. As David mentioned, there's sometimes the market is open and just gives you more time. But we need to know what countries are doing with this time, are doing with this market open.
Joyce, on the table is a 9.5% El Salvador bond. Why? What's your thought? Isn't it the case that the private sector bond issuers or bond lenders will lend to, at rates that just aren't going to be payable by countries? What do you think?
Well, we've seen 4 sovereign defaults this year, Belize, Lebanon, Argentina, Ecuador. So that's about 9% of the sovereign bond index. That's the highest default rate that we've seen since the late 1990s. But I would just say, that the issuance this year, 130 of the 173 billion that's been raised in the capital markets has been for investment grade emerging markets countries. And many of these are Middle Eastern countries or countries that are actually quite solvent, but they're building more of a buffer. So I do think that El Salvador is more of an aberration, but I would completely agree with Carmen. I mean, we've had 58 sovereign downgrades. This is not just an emerging markets phenomena. I mean, if you look at the downgrades to junk in the developed markets, it's running 10-1. In a normal recession, it's run 2-1, downgrades to upgrades. So this is a global phenomena. But I wouldn't say that it's just about market access. I'd say it's market access, it's flexibility, and it's also innovation. So can we do more with credit enhanced bonds and sort of expanding, the universe and using some credit guarantees from the multilaterals for this to make these more investable and tradable bonds, the whole way that the Brady bond market came about. And there also is that just for the truly distressed countries, I mean, 50% of the DSSI has gone to Angola and Pakistan because they don't have market access. So, you need a number of programs that are, quite flexible. But the market access here is very important. You continue to want to get more investors to come into the asset class. And there was $40 billion of capital outflows at the onset of COVID-19 from emerging markets bonds in just March and April. We've seen that stabilize. We haven't seen the inflows come back. But what we want to do is, really take a look and say, look, what kinds of different instruments can be designed that can serve a number of different purposes, the green recovery, the ESG goals that we have as well. Can we actually look at ways in which we can increase the innovation? So I wholeheartedly agree that the amount of stress that EM is going through is is one of the worst crises with the debt and the fiscal burden that's being added. But I do think there's an opportunity for innovation as well.
And Anna gave us the idea that there needs to be really good dialogue between creditors, debtors, and lawyers, and the statutory issues, I think, need to be raised. I'll give last word to Carmen, who is very involved in the really last word, Carmen, and thank you all panelists. Carmen?
I do hope that it is a benign outcome, but I think the old motto of hope for the best and prepare for the worst may be, a good note to end it on.
Well, okay, and so we'll all kind of agree to meet and put on our thinking caps and see where this goes. I think everybody made really good points, and I want to thank all the panelists. Thanks very much.
Hi, I'm Eliane in Brasilia, and you are watching the World Bank Group IMF annual meetings.
Thank you, David. This has been a fascinating discussion, and it's just the start, both to today and to this week. Throughout this week, we'll be looking at key challenges facing the global community, including the digital divide, how to enact a sustainable recovery, COVID-19, poverty, and much more. You can find the full schedule over at live.worldbank.org. Now, let's hear from Baba Yusuf Musa from the West African Institute for Financial and Economic Management, as well as Eric LeCompte from Jubilee USA Network on why they believe debt matters.
Debt management matters right now because developing and emerging economies are facing new financial vulnerabilities and increased risk of debt distress because of the COVID-19 pandemic, which had triggered health, social, and economic crisis. The fiscal pressures exerted by the containment measures of the pandemic has ruined public finances and debt sustainability situation of countries in our region, moving them from moderate risk to high risk and debt distress. To avoid crisis and minimize the negative effect of pandemic shocks, it is necessary that multilateral institutions and regional development banks convert the loans provided to grants and persuade the private sector to do the same.
Debt matters because too many countries were ill-prepared to confront the economic and health crises spurred by COVID-19. Low-income and middle-income developing countries are seeing worrisome increases in extreme poverty rates. In front of us, we are faced with decisions on debt relief and new processes that could allow all of us to emerge with resilience from this crisis. We can act together and transform this moment of despair into a hope-filled future, a future without poverty and extreme inequality, a future that protects our planet for our children and our grandchildren.
I'm John Rosinos in Athens, Greece, and you're watching the World Bank Group IMF annual meetings.
Just a quick mention of another way to participate in the 2020 annual meetings. As you know, the theme of this week's events is resilient recovery, and we want to know, what does resilience mean to you? Upload a photo to the World Bank Live website, and we'll be adding it to a virtual mosaic that will be revealed later this week. And while you're online, be sure to join the conversation using the hashtag #DebtForDev. Now, all morning we've been talking about countries that face a heavy debt burden. Ethiopia is one such country, and we could hear now from its finance minister, Ahmed Shide, about the challenges that his country faces.
Greetings. Ethiopia has been strongly affected by the economic consequences of COVID-19 pandemic. Growth has decelerated, the fiscal deficit has widened, and external accounts have further deteriorated. Coupled with adequate measures adopted by the government to manage this shock, our economy has been able to absorb the first wave quite well, and our public debt so far remains sustainable, as stated by the IMF. Debt service, however, still mobilizes a large share of our resources in foreign exchange in particular, and if the crisis continues, new initiatives must emerge, this time broader. I see two avenues. First, we need a coordinated approach led by multilateral institutions to coordinate in an orderly manner private creditors' participation to debt service relief initiatives. This would be instrumental for vulnerable economies to capture the full benefit of the G20 debt service suspension initiatives, as the call for voluntary participation of private sector creditors has failed so far. Second, we need more to be done by the international community to alleviate the debt burden for Africa. And debt relief initiatives has to further gain in comprehensiveness and flexibility. And an internationally coordinated approach is yet warranted to provide more comprehensive debt treatments, and we welcome current efforts made by the G20 to elaborate a common framework to equip the international community with the necessary instruments to alleviate developing countries' debt burden when necessary. But we need to make sure that those mechanisms do not come at the cost of administrative red tape and a range of conditions so restrictive that it loses all efficiency and flexibility. I thank you all.
Now, when the debt bill comes due, it's the next generation that could be stuck footing the bill. So we thought, who better to hear from than the global youth?
Key decisions that are made today have a direct correlation on the kind of the future that we are trying to build.
To build a better future, we need to invest in climate action.
We need to invest in green economy and new green jobs.
Investing in climate action is ensuring a sustainable future of our younger generation.
To build a better future, we need to invest in girls' education, girls' empowerment, and gender equality policies.
To build a better future, we need to invest in schools.
We need to invest in education for all.
We need to invest in scholarships for young people from low-income families so they could study at colleges and universities.
We need to invest in digital inclusion and equipping young people with the creative and digital skills that they need for the future world of work.
We need to invest in creative industries and education.
We need to invest in social innovation with a clear focus on rural development.
พวกเขามาลงทุนในเมืองกันเลย
Invest in tomorrow.
Investissez pour l'avenir.
Invest in tomorrow.
Invierta en mañana.
Invest in tomorrow.
Alela ibusasa.
Invest in tomorrow.
Voices there from the next generation of global leaders. Well, in a few moments, we'll go down to my colleague Srimati Sridhar, who's standing by with the World Bank Group president, ready to take your questions. The conversation doesn't stop here, though. Join us all week on World Bank Live. But for me and the rest of the team, thank you so much for joining us. Shri, take it away.
Paul, thank you so much. Well, welcome back, everyone. I'm Srimati Sridhar, and we are live once more from the World Bank Atrium here in Washington, D.C. Now, over the next few minutes, we'll be revealing the results of the poll, asking what you believe is the best way to address debt distress. So if you haven't voted, please do so as soon as you can over on World Bank Live. Now, in the meantime, we'll be answering the questions that you've submitted over the past hour. And to do that, let me welcome World Bank Group President David Malpass. David, thank you so much for being here.
Hi, Shri. Only at the World Bank would we have a poll on how do you feel about debt distress and what should be done about it. That's good.
It is. So, David, before we begin, I understand that you just had a call with the G7 and the G24. Do you have an update for us on that?
I can. So this morning, the G7 met and G24. And so people are thinking about debt and debt distress. And so I had a good opportunity in both meetings to give my view on it. One of the things that I think is clear is I'm worried about there being a debt distress situation that will go on for a long time. We need to find ways to avoid that. You know, having one restructuring simply doesn't get a country and the people in the country out of the debt distress situation. And I don't want to see a situation where 5 years from now, people are still dealing with the same debt. It's pre-COVID debt. It was done for investments that may no longer make sense. So how do we get out of that? I think that means a better term sheet for the restructurings that are occurring, much more transparency. We tried to do that yesterday with the new International Debt Statistics Edition, which is a very important innovation. So I described that to the G7. With the G24, I encouraged the leaders of the countries to speak up on behalf of their people, their citizens, as far as that we need a long-term solution that will really last. So that's really the update. Tomorrow is the G20 meeting, and I'm afraid the G20, that's mostly the creditor countries. So you could imagine that it's in their interest to get a lot of the debt paid. But I think for the people of the developing countries, it's in their interest to see an actual solution to this debt problem that will lead to debt reduction. On multiple panels today, we heard people talk about a key goal is to get through this quickly so that we can get to a process of debt reduction.
Absolutely, David. You know, let's get into the heart of some of these questions. You know, given the huge burden of debt faced by the poorest countries in the world, you've said that the debt service suspension initiative can only be a stopgap measure and that the stock of debt really needs to be reduced in these countries. So what will it take for us to get there? How do we make it happen?
Right now, we don't have the tools to do that. So one of the tools is a Paris Club rescheduling. But we heard Odile say that she'd worked on Paris Club issues for a long time, and it didn't do. In Ecuador, for example, there wasn't a Paris Club rescheduling. So then there's no pressure on the non-Paris Club creditors to actually themselves do a rescheduling. So Ecuador is still trying to work out the details, and they're being kept non-transparent. You know, it's very unfortunate that there are non-disclosure agreements, NDAs, with Ecuador, from China to Ecuador, to keep secret what the terms of the rescheduling are. So I think one of the things we should do in new countries as they come up for restructurings, we heard Carmen say she expects restructurings in many more countries because of the depth of the recession, then there should be a Paris Club rescheduling and then a challenge to the non-Paris Club creditors. That includes China, can include some of India's credits and some of Saudi Arabia and UAE credits, a challenge to them to match the terms of the Paris Club rescheduling. So that's one issue that I think can be done. Even today, Zambia is confronting the issue that they can't pay their private sector creditors, and they've asked for a rescheduling. One of the big creditors is Chinese creditors. They've asked for a rescheduling of that, but still haven't heard back. Ethiopia has gone to its large creditors, the non-Paris Club reschedulers that are not the creditors, the non-Paris Club creditors that are not participating yet, and ask them, but is still having to pay. Ethiopia is still paying a large amount of money to non-Paris Club creditors. And so the World Bank is in a difficult position because we're providing such huge grant resources and concessional resources to Ethiopia, but then all of that money flows to these creditors that are still taking debt repayments. So we need to find better tools to do that and really have the G20 speak more loudly for the non-Paris Club reschedulers. They have to participate.
Perfect. Now, panelists in today's discussion talked about the typical length for sovereign debt restructuring. It's about 7 years on average. They also talk about some of the challenges when it comes to restructuring debt. So can you tell us more specifically about debt restructuring? I mean, is it time for a new international architecture when it comes to restructuring debt?
One thing is this gets into the nitty-gritty, but the net present value is a calculation of the future value of money. But interest rates have come down so much now that future money is worth almost as much as current money. So you don't help a country, you don't help the people of the country very much by saying that you can pay me next year. Don't pay me this year, I'll charge you interest and you can pay me next year. That's basically what's happening in the DSSI. It's just deferring the payments and in many cases charging interest on top of the payments. And so we heard some of the panelists making the point that that we have to find a way to accelerate this process and get to debt reduction earlier. Otherwise, the people of the country will have to pay year after year and get nothing for it. That's the situation we want to avoid. But the G20, which is going to come out with a communique tomorrow, I'm worried that the communique will set up what they call debt treatment, which basically means keep the inertia, keep doing what has always been done by creditors, which is that, yeah, they'll take a delay in payment as long as they get to charge interest. So I'd like to see a breakthrough on that. The Development Committee of the World Bank will meet later this week, and I'm hopeful that the Development Committee, which represents both debtors and creditors, will look for a new path.
Now, David, over the past few days, we've also been sourcing questions from our online audience. We've got a question here from Ann Fishman on debt transparency, and she's saying, in Africa in particular, higher debt levels are linked to resource-backed loans. Now, most of the time, there's very little transparency when it comes to these arrangements. So what can be done to improve transparency in loans of these types?
Yeah, this gets into these non-disclosure agreements. So in Ecuador, we were able to, and Ecuador wanted to discuss disclosed the contracts, but was not allowed to buy the creditor. In this case, China, they have a close relationship with the Chinese oil company, but they disclosed some of the old contracts. So at least the world can look and say, okay, it may not apply to the current contracts, which are secret, but the old contracts had the following terms, and people can look inside those. One of the common practices is to have an escrow account where the country, the people of the country produce oil, and then they ship it, and the money sits in an escrow account controlled by the creditor. So that's the situation that Angola is in right now. And Angola has asked for China to relieve them of these escrow accounts, but hasn't been able to get it. Another thing that's going on is, as I mentioned, in the case of Ethiopia, they've asked for relief from creditors, but have been having to still keep paying during that period of time. But the questioner is asking about resource constraints. Remember, the Republic of Congo has been working for years to try to get out from under some of the old contracts that they had entered into. Jordan is in that situation where the creditor required such a tight contract that the country finds itself paying for decades on a contract that doesn't make any sense in a post-COVID world. So I think the countries themselves need to speak up and say to the G20, we don't want to keep doing this. Our people can't afford to keep doing this. And the IMF needs to be more fully engaged from the standpoint of good development outcomes. We all, everyone in the world, wants the people in these countries to do well. But the reality is the legal structure is set up to favor the creditors, not the debtors. I think one thing that would help is if in both the U.S. and the U.K. they spoke to their creditor laws and said, we're not going to keep doing this where we put the full weight of our court system behind the creditors, no matter how onerous the terms of the contract. They've got to find a way to relieve the debtors of the contracts so that they can have a fresh start. The critical thing here is the people in the debtor country need to have a fresh start where there can be light at the end of the tunnel. If they work, they can build a business and not have it taken away by creditors. I think that's the goal that we should be having. And principle in this, China has to fully participate in this process in order to make it work, and they're not doing that right now. The China Development Bank is not doing the reschedulings that the Paris Club is doing, and China Exim Bank, also one of the big creditors, is not really participating fully in these processes.
Sure. We've got a question here from James Matches in Zambia about debt management. And he's saying debt management has always been a big challenge for most African countries. Now, is it because most of them still depend on donor aid to fund their national annual budgets? And what could be the best way of helping such countries adopt serious fiscal discipline?
Yeah, this is really hard, but the current leaders of a country have a somewhat different interest than the people of the country. The leaders want the money now, and if you're willing to come in, even if it's a harsh contract, and give money to the current governments, then they take it, and the people are left with the bill. They foot the bill for 10 years, 20 years, sometimes even 30 years for the repayment structure. And so I think the right answer is full transparency. If that contract is made known to the people of the country, they can work with their government and say whether it's something that is beneficial. We have to have the premise that debt and investment go together, that if the savers of the world, the advanced economies and China, can make money available for resource development, for new businesses, that's good. And paying interest is okay in that kind of situation. But you have to be willing to disclose the contract. It doesn't seem fair to the people of Zambia to have contracts that aren't disclosed and payment streams that will go on for their whole lifetime, which is the situation that they're in. So Zambia is in the Financial Times today describing the extent of their problem, and I think the world community should be supporting a rethinking of whether they need to pay all this this debt, or whether a restructuring now makes sense. I think it does.
Absolutely. Now, David, for the last question here, tell me, what has the World Bank learned from past debt crises?
Yeah, we heard the panelists sometimes talk about, look, we've seen this movie before and it doesn't work out. So in the 1980s, remember, there was the Latin debt crisis that dragged on for years and years as poverty rates went up. So we've learned you don't want to wait that long. In the 1990s, there was this very complicated process that led up to the HIPC initiative that had to be approved by Congress, by legislatures around the world. And I think that was too complicated a process. So what we might look at now is the ability of the World Bank and the IMF working together with the common goal, which is good development outcomes for the people of even the poorest countries. We want to have a process that works for them. And if that's our litmus test, transparency and good outcomes, I think that will be a good process. I'm concerned that the institutions of the global system aren't really set up to do that. They're set up to help the creditors get money even during a recession. And I think we need to really rethink that and come up with outcomes that are more set up to benefit the people of the world as a whole. Everybody needs to come out of this debt crisis and this recession in better shape to face the challenges of the post-COVID environment.
It's absolutely crucial. Yeah. On that note, David, thank you so much again for being here. It's been a fantastic conversation.
Good panels. Thank you.
Thank you.
I'm Leandro Hernandez in Buenos Aires, and you're watching the World Bank Group IMF annual meetings.
Well, this Saturday marks End Poverty Day, and we'll be live from the atrium with the latest data and expert analysis. Ahead of the day, the actor Idris Elba and his wife Sabrina sent us this special message. They have partnered with the international advocacy group Global Citizen to call for comprehensive action on debt. Now, Sabrina and Idris recently met with the World Bank and the Institute of International Finance to advocate for more ambitious measures. Idris prepared this message for us today.
Dear ministers, business leaders, delegates, fellow advocates, global citizens. I'm Idris Elba, and I'm very happy to be here with you today. The World's Poverty Day is not what we had hoped for. Due to COVID-19 and its impacts, we will see a rise in extreme poverty for the first time in decades. The World Bank estimates that 150 million people will be forced into extreme poverty. And this is the population of the UK and Germany combined. And that number of people going hungry every night will double to 265 million people. I'm not here to drown you in numbers or make you feel desperate, but I do have 3 messages for you. First, COVID has taught us that we can only succeed together. We can't come out of this pandemic alone. And while many rich countries have taken unprecedented steps to adopting a national recovery plan, we do need a global recovery plan. Second, we need to ensure our poorest countries have the resources they need to support their people and invest in their own future. But many will need your help to do so. More than 60 countries were already spending more on repaying their debts than healthcare for their citizens in this before the crisis started. This isn't something that we can ignore. Government and the private sector must step up to make sure these countries have a lifeline. So we need to raise our voices in support of suspending debt payments as long as the crisis lasts, but also look into solutions to reduce their debt. There is no excuse for not taking action. If we don't support the poorest and the most vulnerable, there'll be no sustainable recovery for anyone. Finally, let's remember by working together, citizens and governments and corporates, international organizations, we brought down poverty to historic lows. We've done it before, we can do it again. The solutions exist, and we know exactly what needs to be done. Now is the time to recover better together. Join me and the global citizen in calling on government and private sector to suspend debt payments so countries can save lives and futures. Thank you so much for listening.
I'm Hoa in Hanoi, Vietnam, and you are watching the World Bank Group IMF annual meeting.
Well, all this week, we're spotlighting the unique development challenges and triumphs of individual countries around the world. Today, our focus is on Mozambique, and that's from where Country Director Odile Renaud-Basso recently joined me for a conversation. Now, I started by asking her to tell me a little bit more about the bank's work in that country.
It's been such a great opportunity to watch this country actually go from strength to strength. And if you look at just a few things that have happened, even in the last 10 years that I have worked here, Mozambique has managed to halve its infant mortality. They have managed to reduce the maternal mortality rate by almost a third. They have achieved universal primary enrollment, and not too long ago, they have actually made primary enrollment free, so families can actually send their children to school. They have increased higher level education 50-fold. I don't think that there are many countries that can actually claim something like that. And when you look at what has happened in the recent years, since also they have a lot of vulnerabilities to disasters, and even with COVID, their social safety net, actually, and the cash transfers that they are doing are perhaps the best that you can imagine that are going on in the continent at the moment. But constraints remain and challenges remain. It is a country that's still in development. And I'll just focus on a few that I think are really critical. Growth in Mozambique has not been all-encompassing and inclusive. So there are still some very seriously affected areas, in particular in the center of the country and in the north. And let me just give you 2 or 3 statistics that show you just how these areas still need to come up. There's at least 31% of the poorest people that living in these areas. 90% of the children in these areas cannot read to the level that they should be. At least 50% of the women who live here are illiterate. The amount of stunting for children is about 40%. And if we imagine that for stunting, you actually do stop a lot of the development that these children need in order to be productive adults, you can imagine that Mozambique still does have some stiff challenges ahead of it.
Right, and I think this background is so important to have, Ida, because right now the world has been impacted by the COVID-19 pandemic. I mean, tell me, what is the impact of the virus in your country in particular?
So, you know, as in many countries in the world, Mozambique has not been spared the impact of COVID. At the same time, it is also important to recognize that they have actually done quite well in preventing the massive spread of the virus. But that also comes at a cost. They had to shut down their schools, and which means a lot of children today are either at home or they're having some margin of education depending on their access to electricity or their access to the internet. At the same time, you look at the financial sector and you see that a lot of businesses are actually going they're shutting down. There's just no way they can continue. You look at the banking sector, they too are having a lot of issues with non-performing loans, because when people shut down their businesses, they of course cannot service their loans. But that also means that the next generation of lenders and borrowers are going to struggle a lot until the demand and the supply, can actually come together and can be fulfilled. But let me go back a little bit to the issue of the children. You can imagine for most people that have electricity or internet, you never think that it's an issue. Okay, school is closed, you get your homework and over the internet. Some of these children don't have that access. They have no access to sustainable reliable and efficient electricity. But on top of it, they cannot even access the schooling material on their internet. And so the bank, you asked me a little bit earlier on, what are we doing? We are using the COVID not only to learn from the impacts of it, but also to learn how to do differently. One example, now when we upgrade schools, we're very careful to make sure that we also think about solar energy in the school, and if possible, even internet access, so that children are not left without the opportunity to go to school. The real issue is many of these children, unless we really put a big effort, may never return to school again. So we are trying. The government is doing a lot as well, but there is quite a gap to be closed.
Well, that's certainly very grim. And I mean, as if the pandemic isn't enough, Mozambique was also ravaged by 2 really hard-hitting cyclones last year. So what has been the effect of that as you look to recover from all of this?
Pretty significant. You know, I was looking at the numbers quite a while back, and it was something like 1.5 to 1.7 million Mozambicans were affected. 58% of the population here expect at some point or other to be affected by a disaster, many of them which are, water related. You think about that level of vulnerability. You also think about some of the fragility in the north. As you're aware, there's also quite a lot of friction that's going on in the north. You have on top of that the COVID, and honestly, the ability for the country to be able to recover on its own is something that is not very easy. The good thing in Mozambique is that not just the World Bank, but a lot of development partners and the government have formed very reliable partnerships that are actually trying to resolve all of these. Idai and Kenneth were a little bit unusual. I mean, to have 2 cyclones of that size in one season is unusual. But then one has to ask, is this the future? Is this how things are going to be more and more as we look forward? And I think this is, again, a point where we need to ask ourselves, what we are doing and what we are investing in, is it responsive to the potential for disaster? Is it responsive to people in terms of their ability to actually maybe even leave where they were staying and go and find better places? Are we actually building back better? Are we building back the resilience of the communities? And I think these questions are things that are front and center of every project that we look at today in Mozambique. So yes, there have been challenges, but it has also given us an opportunity to think differently, to create, and to actually try to do something that's better than what we had before.
Well, Ida, let's end on a positive note here. Tell me, what do you enjoy the most about your job?
But first of all, Sri, before I get to that, let me say, what I'm telling is not negative. It depicts a country that has a lot of energy behind it. It depicts a country that has a focus and that has a desire to get somewhere. And I think to get to a good result, you need to first understand the challenges. You need to understand how to address them. And this is where I also feel what brings me pleasure when I work is to see a client who doesn't see a project the way we see it, a piece of paper, a project put together, the components, but actually sees the value of what has been brought to the table and hear them describe a project, not in the context of the way, again, as I said, looking at components, but actually from the perspective of what they have been able to benefit. There is no better pleasure than that. There is no better pleasure than sitting with the client and planning to make the best out of the value, out of the money that they get and the value that they can get out of it. So every day I wake up motivated. There's always something to be done on a single basis. And I'm very happy and very, very grateful that I actually have this opportunity to help and to maybe even change our lives for those who need it the most.
Well, we're so grateful you could join us here today, Ida. Thank you so much for being here.
Thank you so much, Sri, for the opportunity to talk about Mozambique, and I look forward to us discussing another country next time.
Me too.
That was Odile Renaud-Basso, the country director for Mozambique.
Well, as these meetings have gone virtual, those of you watching at home have a greater opportunity than ever to participate. All morning, you've been sending us your questions and comments, as well as voting in our poll. Now, back with us is our social media expert, Papsi Mariano. Papsi, welcome back.
Hi, Shri, and thanks for calling me an expert.
You are one. Now, Papsi, the poll for today was, what is needed most to break the cycle of debt distress and help poor countries cope? People have been voting. What are they saying?
So let's remind everybody what their 4 choices are. It's suspending debt payments, reducing debt stock, balancing creditors' rights with the interests of the poor, and increasing debt transparency and accountability. So can you make a guess? What's the top answer?
I'm going to say it's debt transparency.
That's correct. So we received across all platforms 6,333 votes.
Wow.
So that's amazing. So thanks for that, guys. And increasing debt transparency and accountability got 42% of the votes.
Wow. Well, the people have certainly spoken.
Yes.
And Papsi, while we still have you here, today is just the first day of the annual meetings. I mean, what is going on tomorrow and also for the rest of the week?
Yes, so we still have 4 exciting events coming up. So tomorrow from 12 p.m. Eastern, 1600 GMT, we'll look at how countries can best incorporate climate, nature, and social inclusion into their recovery plans in our Sustainable Development event. And then on Thursday, from 12 p.m. Eastern again, we're exploring human capital, specifically the challenges posed by COVID-19 to health and education. On Friday, it's our event on digital development, Closing the Digital Divide, and that's from 10 a.m. Eastern or 1400 GMT. And on Saturday, we round out the week, 10 a.m. again, that's 1400 GMT, with End Poverty Day.
A lot of really great events coming up. Now, Papsi, remind me, can folks watch back today's event if they missed it?
Absolutely. So just go to live.worldbank.org. The replays of all the events will be available for you to watch.
Perfect. And finally, before we let you go, tell us again, how can folks engage with us this year?
So first up, please use the hashtag Resilient Recovery to join the conversation throughout the meetings. Again, each event will have a poll. Please answer that. We really appreciate having a wide range of voices, especially on our virtual annual meetings. And maybe lastly, again, the digital mosaic is still open. It's starting to fill up, but if you want to share your photo about resilience, go to live.worldbank.org/mosaic and check that out.
Fantastic. Well, Papsi, thank you so much again for being here. Well, folks, that brings us to the end of the first day of the 2020 World Bank Group IMF annual meetings. Do join us tomorrow at noon Eastern U.S. time. That's 1600 GMT. Until then, from me and the rest of the team here, have a great day.
From Mexico City,
in Athens, Greece,
in Lome, Togo.